The master has failed many more times than the student has ever tried. Stephen McCranie. My friends, the way that masters teach things is based upon their experience, what they've gone through, what they've learned, and particularly the mistakes they have made. So again, there's no need to repeat the mistakes that the people who've gone before you have made. That's why we urge you to practice every day. Learn from those who've done this before. Learn from the books, from the trainings, from the videos, and most importantly, from your practice trading. What do we see going on in the markets? Well, we have an update for everything but gold. And we have some good news, particularly on the Qs. That is the Nasdaq 100 when we get to it. Let's first look at the S&P 500. What's the overall mood of the market? Well, when you look at the four stair-step down candles, and the biggest being the current one, 3 days into a 5-day candle, I would say decidedly down on that weekly chart. That weekly vertical crossover just keeps looking better and better and better as the market continues to plunge. Now, it was up for the day on the S&P. At the end of the day, just barely 0.58% as everything petered out. We look at the 2-day candle. Now remember, this is just the first day of the latest 2-day candle. And I'm sorry, I said there's 2 more days left. My days are starting to run together. 1 more day left. This is the Thursday portion of the Thursday-Friday 2-day candle. It is a down candle, but look, it's not reaching a lower low. The body of the candle is lower, but again, the low throughout the day is not lower. Price percent oscillator slowing down a little bit. Derivative oscillator actually peaked back on the 16th, moving up a little. That's just the first day of the latest 2-day. We go to the 4-hour, and that's where we see things again, sliding sideways. It really bottomed out back in the afternoon on Wednesday. Up for the day, 0.58%. Again, lost some of that. You can see the wick on top of that last candle at the end of the day, but it did end up being a green spinning top, open box green spinning top. Didn't cross over yet. We're going to see something different with the Qs. And again, might give us an opportunity to jump into something following our rules. Now, that's where we are. S&P still down on all the charts. Now we're going to move to the Qs. It settled just a little bit higher than the S&P, which was at 0.58%. The Qs, 0.60%, so 0.6% up. Look at that, decidedly down. Price percent oscillator still going maybe a little steeper angle than the prior week. Derivative oscillator gaining downward momentum. So again, overall, market still strongly down. Look at the 2-day candle now. That is a green candle, but it's a solid green. It means a slowdown, and the go down is what we say, sitting right there on the 2-day trend line. Price percent oscillator still heading down. Derivative oscillator losing downward momentum. It peaked back on, that's our leading indicator, peaked back on the 16th. So there's been a slowdown in the down movement. Now check out the 4-hour candle. Look at what happened. We've seen a green derivative oscillator since the morning of Tuesday after that big down day on Monday. A sideways slide. Price is about where it was back on Tuesday, actually somewhere in the realm also of where it was back on Monday with the moving down and that long wick on the bottom of that Monday afternoon candlestick. So again, what are we looking for? Well, we're hoping to see this pullback continue. Maybe it'll go up tomorrow. You know what it might also do for you? It may bounce off. If the morning opens up strongly down and you see things bouncing off of that, and that closes around that noonday candle or so, closes, pulling away from the red signal line, might give you an opportunity to jump into a practice down trade on the Qs. Now, maybe it'll roll up a little bit longer. Maybe tomorrow will be an up day too. Remember what's going on here. There is so much unwinding of all of these assets. So much stuff is happening with these hedge funds, margin calls, all the craziness that has been happening as the market has been inflated. We've talked about share buybacks and all those things that have gone on. So much is unwinding now. That is why things spiral so crazy. And that is one reason that gold is still down and bonds have been down, although bonds recovered some. We'll go into that in just a minute. But key takeaway from today, watch the cues. See what happens. If it's an up day, S&P may also rotate over going up. Remember, our 2-day and weekly are still primed very strongly for down moves. Overall mood of the market, highly down. So if you have a reversion to the mean, that is things rotate back over on that 4-hour chart going down, by all means, practice trade a down move. Put in effect your loss limits. You might say, what would I put in effect to purchase for a practice trade? Well, of course, my friends, the inverse fund, PSQ. That's a single inverse, which is a good place for you to start. It goes up. It goes up when the underlying QQQ, Nasdaq 100, goes down. See where it says short QQQ? I'm looking at the screen for everybody listening to the podcast. That's what PSQ is, Papa Sierra, Quebec. So keep that in mind. I guess I should say Quebec. It's a Q, PSQ. Okay, that's where we are on stocks. We're going to leave stocks, go to bonds. Bonds up for the day, 2.72%, our biggest gainer for the day. But what do we have this week? We have a red down candle with a wick on top that's about a third, maybe a half of what the wick is on the bottom. So a lot more depths being plumbed as far as this week goes. Price percent oscillator is positive, but heading down. Derivative oscillator losing upward momentum. So again, the weekly chart still in a confirmed up move, although weakening. 2-day chart crossed over going down back on Wednesday, the 18th. So that was Tuesday and Wednesday. And what do we have here as far as Thursday goes? It is a red down candle, even though it was a strong up day. The reason we're looking at Heiken Ashi candlesticks, and they are showing us the average pace of price movement, which is still decidedly down. So we do see that the price percent oscillator's lost a little bit of that downward momentum. Derivative oscillator has not. Why? Because you have 3 2-day candles, 6 days of down movement that's really spiking it. We go to the 4-hour chart. That's where you see sort of the leveling off. You see up movement in the morning and then paired off in the afternoon with basically a doji indecision tending up. 4-hour chart still primed for down movement. We got nothing there on TLT, still in flux. So we have the 2-day chart is still primed for down movement. Weekly chart primed for up movement, which means we have no trade. We got to wait for the 2-day and the weekly to be moving in the same direction. Why? Because we need clear trends to follow. Otherwise, you're going to get killed. Can you imagine having bought into an up trade out of time on Friday only to get butchered as the week started? No, you would not have wanted to do that. That's why we don't do that. Now, again, and it works time and time again. Folks, while all this is going on and you see the market just wildly swinging back and forth as things unwind, don't get greedy. Don't get panicky thinking I've got to get in and I've got to capture some of this. You're going to catch a falling knife and cut your hand off. So practice trade what makes sense. Now, lastly, we go to gold. Gold down for the day, almost 2%, 1.89%. Look at that hammer down on gold. Big down candle. Big down candle. How many of you paid attention to that weekly vertical crossover that we announced on Friday the 13th? It would have served you well if you had, again, purchased a practice put on that. Would have served you quite well. So we see gold down, price percent oscillator heading down, same angle, derivative oscillator gaining downward momentum. Go to the 2-day chart, same angle of down movement, stair steps, really 4 of them going into the 3rd one since the crossovers, first day of the latest. So that's 5 days of down movement, looking quite prime. The only thing to pay attention to is if you check out, the lower low hasn't been reached in gold yet as to where it plumbed on the Friday, Monday candle. And then we go to the 4-hour chart, and you can see where the stair steps of 2 days of decent, strong down movement. Still want to see it hammer down and hit that low and go below from Monday. Or maybe, and this is what I want you to think about, folks, I've been studying gold for a long time. And again, this is not physical gold. This is the gold of GLD, okay? Physical gold, it seems to possibly be separating more and more than this traded gold that you see in the ETF. So what I want you to pay attention to is the fact gold is down, and people say, why has gold been down even when the market's down? There's a lot of margin calls, folks. There's a lot of people that are doing a lot of things to unwind unhealthy positions, and perhaps they are having to sell gold. And the supply, again, think about supply and demand. When you don't have a lot of demand because everybody is losing their backsides and people are having to sell gold to make margin calls, that could be what is driving GLD down. So keep that in mind. That might be a reason. You know, the matter of fact, though, is we really don't care. We're just going to wait. And if you are in that short on gold, great for you in that practice trade. And if you're simply going to wait for gold to bottom out and move back up at some point, which it surely will, that is fine too, my friends. That is fine too. That's where gold is. That's where we are as we end the day on Thursday, going to the last trading day of the week. It has been an exciting week. We're going to keep our eye on the cues, see if it offers us an opportunity to jump into a practice trade tomorrow or this next week. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.